Thank you again, and thanks to the Philly Fed. Hi, everybody. My name is Trish Mosser. I run a program in central banking at the School of International and Public Affairs at Columbia, and I dabble in cybersecurity and finance. I'm very pleased to be moderating the panel this afternoon on enhancing cybersecurity and financial resilience in a digital banking era. When I began to work on cyber risk and financial stability, I was about to say more than 5, but I think it's almost 6 years ago. The very first thing I learned very, very early on is that cybersecurity can't successfully be done just at the individual firm level, particularly in finance. It is, and it must be, it has to be inherently, I'll steal something Katheryn said earlier today, a team sport. And that's particularly important in the financial services industry, which is so deeply interconnected. There's no way that you can have a shock one spot that isn't going to spill over all over the place, and in sometimes unexpected ways. So as a result of that, the focus of today's panel is going to be very much on information sharing, cooperation, coordination. The idea that we are all in this together. I'm going to echo now 2 of the folks on the previous panel. That is exactly right. And I think in many dimensions, cybersecurity, particularly in finance, is a bit of a different topic and a different approach in some ways than some of the other topics that have been talked about at this conference. And by the way, this information sharing and cooperation has to include both the public sector and the private sector and across a wide variety of firms, which is why this lineup is really good. If you actually, if the goal here is to keep the financial system resilient, you're going to have to take this kind of approach. We're going to take a really traditional approach to this. Everybody's going to make a short statement, about 5 minutes, I think. I'm then going to ask a question, maybe 2, and I hope we'll have time to take, if Jalapa will give us a few minutes out of the break, have a few minutes to take questions from everybody else. I'm going to start with the public sector, though. I figure that's always a good place to start. And so let me introduce the panelists. And this is, I think, the order they're going to speak in. Graham Steele is going to kick us off. He is the Assistant Secretary for Financial Institutions at the U.S. Treasury Department. Next will be Chris Feeney, Executive Vice President at the Bank Policy Institute and the President of BITS Technology Policy Division. Third will be Brian Heemsoth, I'm going to pronounce that incorrectly, sorry, Executive Vice President and CISO for FSI. I said FSI, didn't I? FIS Global. Man, this is not my day. Next will be Ari Redbord, Head of Legal and Government Affairs at TRM Labs, which is a blockchain intelligence company specializing in the detection of crypto fraud and financial crimes. And last and certainly not least, will be Katheryn Rosen, Managing Director and the Global Head of Regional Information Security at JPMorgan Chase. So, Graham, floor is yours.
Hey, thanks very much. And it's nice to be here. Thanks for the invitation to talk about this and for a panel about cybersecurity at 2:50 on a Friday afternoon. This is more people than I thought would actually be here in the auditorium. So excited that you all are interested in hearing us talk about this topic. So as the person in the Treasury responsible for the Office of Financial Institutions, one of the 4 offices I'm then responsible for under that umbrella is the Office of Cybersecurity and Critical Infrastructure Protection. And what that office does is it is the Sector Risk Management Agency, and Treasury on top of that is the Sector Risk Management Agency for the financial sector. What does that mean? It means that from a cybersecurity perspective, we have a lot of responsibility and we have almost no authority whatsoever to then meet those responsibilities on top of it. So we have to think about how we can be the most effective in both partnering with, but also pushing and being pushed by the financial sector to ensure that we are safeguarding the financial system and our critical infrastructure from cyber attacks and other vulnerabilities. And OSIP's responsibilities are both cybersecurity and also operational issues and resiliency. And so I'm probably throughout this conversation going to slide in and out of those 2 things. So I apologize in advance for conflating them. And the tools we try to use I would say are a couple. One is try to think about gaps and authorities and what our partner agencies across the banking system and the financial regulatory system. I'll try not to use a lot of the insider cyber acronyms that we use too often that no one outside of our tight-knit community knows what they mean. But working with our partner agencies who do have the direct authority, try to close the gaps and vulnerabilities that are there. And a lot of that means supervisory expectations, examination, regulation, those kinds of things. And the other piece is information sharing. What are we hearing and seeing, both through the intelligence community, but also the things that we are seeing as an actor as well, administering the fiscal and payment system, and then hearing from our sector partners about what they're seeing either in their systems here in the U.S. or when there are international incidents happening abroad, and feeding that back into us so we think about how we respond on the public sector side, other policy, from a cyber resilience perspective and otherwise. And I would just say, so those are the tools, those are the kind of the tactics that we use. We can get into them more in some specific cases that have come up lately. But two of the things that have been a focus for me in this space since I started 2 years ago, I would put in two categories. One is fragmentation and the other is concentration. And so we've done some work, since this is a conference about fintech, we've done some work on both crypto and financial and fintech technology uptake, and that's really the fragmentation side. It is an area where we use the term unbundling, where a lot of these products and services are getting moved, where you have a technology stack that has multiple different players in that chain. And so from a cybersecurity and operational perspective, that means that there are some efficiencies there when things are working very well. But if something breaks down in that chain, then it means that everything else around that potentially stops. Or it means if a bad actor gets in one of those links in the chain, it can spread and it can infect more widely. And so we've got to think about how we deal with that fragmentation issue using those two tools that I talked about. And the thing that I think has been emphasized throughout today that we've really been focused on is third-party provider oversight and how to get in through the regulated institutions to ensure that some of these third parties are meeting the high standards that we want them to meet in terms of good cyber hygiene and other practices. And then on the information sharing side, a thing that we had to deal with, particularly with the Russian invasion of Ukraine, was there are now more actors in the ecosystem that are operating overseas or here in the U.S. that are potential points of vulnerability. Well-regulated banks, GSIBs, we have established relationships with, we know how to share information back and forth, and we tend to have an open line of dialogue. But some of these upstarts don't even know who to pick up the phone and call at Treasury if they're having an issue, and vice versa. We don't know who to call and how to get information to them about how to think about vulnerabilities if a country like Russia is planning on doing something. And so that presents challenges on the operational regulatory side and on the information sharing side. And I would say we've seen some of these vulnerabilities in this last week, where we had a fintech payment company go down for a few days just this week that halted a lot of activity and disrupted a lot of these products and services. So that's the fragmentation piece. The concentration piece, we did a report about cloud service providers and the adoption of cloud services throughout the financial sector earlier this year in February. And that's a point of concern too. You can have an issue if things are they're dispersed too widely. You can also have it if they're too concentrated in individual entities. In the cloud, in the CSP space, the cloud service provider space, there are three dominant players there. And so the concerns there are several fold, actually. One is, with the chains and the fragmentation, you get into one part of the chain and you can sort of spread throughout. Here, you just got to get into one large cloud service provider, and you can potentially get around and get access to a lot of different things depending upon how good their protections are in there. And so that's a risk from information security and cybersecurity. Cloud service providers also use something called the shared responsibility model, which means that they are responsible for safeguarding their own systems, but also their customers are responsible for safeguarding that as well. And because the CSPs are so large, they have significant bargaining power with their clients. And so that, the CSPs should be the ones safeguarding information, but their clients are also responsible for liability if something happens to it. And there's not an area there where there can be good bargaining about what that relationship ought to look like. And so that's a thing we're very concerned about, is thinking about that relationship between these large concentrated firms and banks in particular, particularly smaller banks that know they want to be on the cloud in order to be competitive, but don't actually know how to negotiate some of these things with the CSPs. And then the last piece that I would say is similar to with fragmentation is oversight of the cloud platforms. Do the agencies have the tools and the authority they need to get in there and look around and get information out of them in a robust way to really understand what those safeguards look like and to hold them to high standards? And here again, just in the last few weeks, we saw issues at Microsoft, one of the large cloud service providers that experienced 2 different vulnerabilities, were not fully transparent with the sector about what had happened there, and it took way too long to get information out of them. So that was a real wake-up call to us that there's more work to do in that space as well. So maybe I'll stop there. Hopefully I didn't take my full 5 minutes, and we can have a little more time for some questions and back and forth.
Great. So thank you, Graham, and thanks for doing this in Jalapa. Yes, this is my 7th year, and we used to do a lot of work, and now we just basically give you a title and everything else happens. But on a serious note, I'm Chris Feeney. I work for the Bank Policy Institute. We represent 42 of the largest banks, plus about 15 other core providers, service providers, insurance companies. So we see a pretty good sort of cross-sector view, if you will. And what Graham said, and I think he's maybe underestimating what an effective job Treasury has done. So, I was fortunate, I guess, to be vice chairman of the Sector Council, which is a place where we coordinate some of the work we do as an industry. We do that with a corollary in the regulatory community called the FBIC, which is the Federal Banking Infrastructure Committee. And we got to live through COVID, SolarWinds, Log4j, and more recently, the Russian invasion. And the change in transparency, the change in the dialogue, the change in the kind of conversation we have to protect this industry occurred through that, sequence of events. For just sort of background purposes, we would meet every Monday, Wednesday, and Friday, 7:30 a.m., us, DHS, FBI, Treasury, regulators, you name it, to share what was happening during COVID, or we did something very similar in SolarWinds. But that's the level of information sharing. We've sort of reached a new level, but there's more to do. But that's where we need to be. I think, the firms that we represent and the industry as a whole likes to be transparent, is willing to share. We understand the importance of incident reporting, incident notification, but it could be done better, right? And that's really the environment we're in. Thinking about COVID and that as an example, it accelerated the move to the cloud. It accelerated the move to third-party providers, and that accelerated the risks that increased the kind of sophisticated attacks that this industry sees. So it's incumbent on us to work together even more so. Some of the good things that have occurred and continue, the incident notification rule that the regulators put together was a back and forth for a better part of 5, 6, 7 months before it came out. It works for everyone. Operational resilience, 5 years of working with the Fed when they were chairing the Operational Resilience Working Group at the Basel Committee. We got something that is principles-based, that around the world is useful. People can identify risk, put it in a high-risk, high-priority order, and then make sure they're resilient towards that. I think that's really important. Some things that have not worked so well, when some regulators or others, fragmentation is an example, but, introduce new requirements that are inconsistent with what already exists. The best thing we can do for this industry is to make sure that the people who are frontline people, second line people, really fighting the battle, have as much time on their hands to do that as possible. Back to the good side of the equation, the White House is working on regulatory harmonization. It's part of the national strategy. CERCIA, which is the law that's requiring CISA to actually develop an incident reporting standard, is very important. These are the things that actually help us. We've, I think, reached a level of, candid conversation, thanks to a lot of the people who sit around this table, because we're looking to protect the industry. But there is some good and there is some work to do that I think as a group we are really pushing for. And that's something that as an industry, as a sector, we think is really, really relevant. So a little less than 5 minutes. I gave us some back. There you go.
Well, maybe we'll finish on time.
Great, thank you, and appreciate the opportunity to be here and speak with you all today. Brian Heemsoth, I am the new CISO at FIS Global. I think I'm coming to the end of day 14 here. So prior to that, I held the head of cyber defense role at one of the major U.S. banks here. So it's been a really interesting progression for me to evolve from coordinating cyber and cyber defense strategy for a single large institution into a role where we really have a responsibility across the entire industry, including to the smallest of the small regional and sub-regional banks. And that was an exciting opportunity for me. Chris did a great job of bringing us through a lot of the strategic initiatives that have been enacted through various channels in the last several years related to uplifting our resilience and putting the industry in a better position. Given my cyber defense roots, I'm going to geek out a little bit on the operational sharing of information. I just believe so strongly in that as an enabler of strong defenses. Certainly we've run into some challenging events as an industry in the last couple of years. A couple of folks have mentioned Russia, Ukraine. That is certainly the hallmark event, right? There were a number of smaller attacks, targeted attacks, as part of that, which yielded isolated impacts. But in whole, the industry did not sustain the types of systemic impacts that we prepared for and that we were worried about. And, certainly a lot of that is due to plenty of great preparation, right? Having the right controls in place, having the right resilience planning in place. But I think the real difference maker at that point in time was actually the information sharing that went on through various channels, right? So you've got your trade associations, your FSI SACs, your ARCs, your organizations like that. And we also saw in that time frame the emergence of government aligned and government sponsored sharing channels like the JCDC group, as well as some of the tactical chats and information sharing forums that were set up within. So, speaking from my time at the large bank, that was a fantastic enabler of point in time resilience throughout the entire industry. And it's been highly encouraging to see that momentum, really continue to increase as we've gone through the next 18 or 24 months. As I look at, where I sit now in the industry, it is, a different view on things, right? As a part of a team that is a strategic service provider for much of the industry, that same focus on information sharing and the consumption of that information is critical for us at FIS as well. And, we view that as a real opportunity for us to help take that sophistication, that maturity, that awareness of cyber threats, and the ability to develop controls that create resilience against those threats and bring it all the way down market, right, to the smallest of the small banks that are our customers and consume our services. So, really just an open kudos for, all of the many organizations that have been open about sharing, certainly over the last few years and continue to increase, and an open call for more of it, either through the trades or through, the JCDC and other channels TBD. So thank you.
Thank you. So Ari, you're up. You have a kind of different lens on this, a little bit different lens.
Yeah, no, thank you so much, and really looking forward to the conversation. First, Julapa, thank you so much. It's a real honor to be part of this. You've really assembled the Avengers here. I think it's an honor to be a part of this amazing lineup. I'm Ari Redbord. I'm the head of legal and government affairs at TRM Labs. We're a blockchain intelligence company, and we'll sort of get into that a little bit in a moment. I spent about 11 years at the Department of Justice as a national security prosecutor, and then a couple of years at Treasury working on illicit finance issues. We have more than enough cyber expertise here on this panel. So I'll talk a little bit about sort of illicit finance risks and more importantly, really how we can use technology to mitigate those risks. Look, we've spent a few days now talking about, in some panels, talking about really the promise of cryptocurrency and blockchain technology, this idea of sort of cross-border value transfer at the speed of the internet at scale. It's extraordinary for lawful purposes and very attractive to illicit actors who also want to move funds cross-border at the speed of the internet. But what's sort of missing, I think, a lot of times from that conversation is the way law enforcement, investigators, compliance professionals at financial institutions and crypto businesses are actually using the blockchain to trace and track funds, to do compliance, to build investigations. It's sort of ironic, I think, to some extent. We hear all about sort of the illicit finance risk, but really a use case for for blockchain technology today is anti-money laundering. When we talk about blockchain intelligence, blockchain analytics, just sort of my very quick version of that. What we do is we take that raw blockchain data, the to, the from, the alphanumeric address, and we layer it with threat intelligence. We have a team of former U.S. law enforcement and global law enforcement who are out there scouring the darknet, who are interacting with crypto addresses online to build a database attributing crypto addresses to illicit actors. And then compliance professionals at financial institutions, at exchanges, are using that to ensure that they are not transacting with sanctioned Russians or, DPRK cyber actors or other types of criminals. And then, equally importantly, every U.S. federal law enforcement agency today is using TRM to build investigations, to track and trace the flow of funds, ultimately to lead to an exchange, serve a subpoena, and then build an investigation, potentially being able to charge, prosecute, seize funds in these cases. So, if you talk to law enforcement today, I think they would say this is probably the most extraordinary financial investigations tool they've ever had, right? Open blockchains, and are really taking advantage of that. Just this week, 2 days ago, I've lost track. The FBI released a press release with 40 cryptocurrency addresses associated with North Korea and attributed the stake.com hack. It's an online casino that North Korea stole about $40 million from. And we immediately, investigated these. We saw Twitter sleuths and, folks using open source tools to do that. It's an only in blockchain type story, right? That anyone has now access to data to do sophisticated financial crime investigations. So, excited to kind of continue that conversation. But I think that one thing that's really important when we talk about national security risks in crypto, DPRK, illicit finance, terrorist financing. When we talk about scams and frauds, we also need to talk about the ways we can use this technology, really harness the power of blockchains, transparent, traceable, immutable, to actually investigate fraud and financial crime and stop it.
Great. Thank you, Ari. Last but not least.
Excellent. Hi, everybody. Katheryn Rosen. So I'm going to bring us back to enhancing cybersecurity as we talk about information sharing and pick up on a few of the threads that were spoken about by Graham and Chris as well, and Brian. And I'm going to lean in a bit on what the private sector is doing to really enhance that information sharing. We talked a bit about the threat environment. Everyone here alluded to it. We have deeply funded cyber actors, nation state actors, whether they're actually the state themselves or gangs that are being funded by the state, who are deeply sophisticated and moving, I like how you said, at the speed of the internet in terms of how everything's moving here. And with that threat environment, we alluded to the systemic risk that's available, and Trish really kicked us off with that, is the interconnectedness of the financial services industry. Here we have the biggest banks. Here we have our third-party providers. Here we have some of the other markets that are being built around financial services like crypto and deeply becoming more ingrained there. As we think about the systemic risk and that contagion, importantly, we are really looking for more work with the government in terms of information sharing. And so we've coined this phrase, operational collaboration. So every industry has to have its words, multisyllabic words at that. And what operational collaboration is really trying to drive at is not just the information sharing of getting, high level threat intelligence and information information, say from the government, that we can take into our systems, and folks like Brian who are hands-on actually looking at that defense. It's really about working together to analyze the threat, monitor for the threats actively, and really work together and collaboratively to be able to proactively defend. And so where we've been doing this work is one, we've done institution building, and Brian mentioned the acronym, the ARC, because we have so many. That's the Analysis and Resiliency Center that the financial industry put together. It's made of the companies that Homeland Security designated as critical infrastructure. And so these companies self-organized and came together with really two goals. One is to set what are the systemic risks that we're facing as a financial services sector. You can talk to firms. Everyone has very sophisticated risk organizations, but systemic risks we don't look at on our own. We look at together. And so we really thought about what are the things that keep us up at night. And I'm sure many of you in this room have your own list. But things like payment systems, which we've talked about, I know at this conference over the years, are something that is of high regard, right? So we identify what our biggest risks are. And then we think deeply about how do we defend against those. So we're doing that hard work in terms of coming together to establish the risk and the risk lexicon, but also working directly with the intel community. Because if we can figure out what those risks are, what those systems are, how they work, what are the critical nodes, then we can work with the intelligence community to collect against those functions. So how do we really keep ourselves safe? And so we've done tremendous work. Graham and his team have been extraordinary in terms of this systemic risk management agency, in terms of advocating for the Treasury, for the financial services industry, coming before all of government in terms of what we need, and actually working with us to get that ready and actionable intelligence that we need. So we've come a long way. We all said there's a lot more to do here, as we know. But I think importantly, the sector, we really recognize our role as critical infrastructure, and especially the large banks. We carry that, and JPMorgan especially. I mentioned payments. When you pump as much money through the payment system as we do, we really have to take to heart keeping our defenses up and being proactive in the work that we do. So I wanted to also talk a bit about challenges in the current environment, and then I'll close with this because Chris mentioned incident reporting. Wow, incident reporting. It is so important. It means a lot of different things to different people, but it's not easy. And you have firms that are actually hiring fleets of human resources just for the act of the report. This is not protecting the bank. This is not defending the bank. This is really about getting the information out to our regulators. A firm like JPMorgan has over 130 regulatory authorities that we have to report to, and there are nuances in the reports. Different materiality thresholds, different criteria, different timing, different follow-up, different precisions of detail and information that has to be out there. So as important this is, actually, the global regulatory community is making it harder in terms of the work that we have to do. The Financial Stability Board, which is an arm of the G20, it's the central banks and a number of the regulatory bodies get together, and they're working hard to create a common reporting framework, especially for a global bank like ours. This is great if the G20 countries actually use it. And so for us, having 130 types of reports that we have to put out, a new regime hopefully replaces many of those and isn't our 131st. So the incident reporting that was mentioned here earlier, we've had, even in the U.S. banking regulators have done some good work that Chris mentioned. The SEC has its own rules, and now we'll have a federal rule that's obligated by CISA to put out. So we have a number of these things even happening right here on our own shores in terms of the complications that we have going forward. So harmonization is, I think, one of our biggest challenges. That was just one example that I wanted to share. But bringing to bear the information that's flowing both ways is really important for enhancing security.
Thank you. Thank you all. That was great. Now, so I'm going to take, and we came in on time. That's fantastic. Sorry, it's Friday afternoon. So So I'm going to take moderator's prerogative and ask one question, but it's a really big picture question. So I'd actually sort of like to have everybody's own individual take on it. And here I want to go back to the title of this session and go to the digitalization in banking part of it, which everybody's talked about a bit. But given the number of conversations at this conference that have been very forward-looking about how digitalization is going to continue to expand and get even more complicated and harder to understand, my gut tells me that the security challenges that go along with this are going to be not additive but multiplicative potentially. And the kinds of vulnerabilities that maybe not getting paid a lot of attention to right now could really expand. So my question to all of you is what needs to happen, private sector, public sector, regulation, what needs to happen with information sharing arrangements, with detection and response plans, with financial infrastructure, and comments about what might need to happen with regulation too, are perfectly welcome. You're welcome to pick your poison, in that list about what do we have to do to be better prepared, to be more forward looking in terms of the fact that digitalization is not going away, it's accelerating.
Chris alluded to this. We are in a place where regulation can't keep up. It's almost an existential crisis in terms of our space and where we are. And I think there is a feeling that giving firms more prescription is helpful. The prescription actually isn't helpful. Giving some jurisdictions suggesting that we need to do certain kinds of testing with certain kinds of resources at certain times. Where we need to be advancing to is continuous monitoring. We're going to have to need the room to be able to advance our own cybersecurity tools at the speed of which we have to defend against the threat environment, and stepping backwards to have to prove out a certain degree of testing in a certain way at a certain time is actually defeatist to the purpose of actually protecting in this go forward environment. So I'll leave it there, but that's, prescription. We really need principle-based issues where we say, go test, not how to, at this point, do anything. It's the what.
A follow up with that, because, for JPMorgan to say that makes a lot of sense. But at some point, I'd like to get Brian's reaction about some of his customer base and the ability of them to actually respond to principles based as opposed to sort of point in time. Because I think there may be a real size and sophistication difference here. Sorry, just an observation.
I'll jump in here. So it's a great question, and your response was fantastic. So I echo all of your points, and I'll focus on your specific add-on here. The smaller institutions are in a really interesting predicament, right? The expectations of their customers for digitalization and the ability to complete all of their financial transactions without walking into a branch, without going to a broker, without calling an advisor, are the same as what those same individuals would have if they were working with a JPMorgan. So it puts a significant challenge on these smaller organizations of lesser size, lesser technical sophistication to be able to deliver those services. Now, of course, we know as they do that, they're also increasing their attack surface, right? The demands on their cybersecurity program increase, right? So I just realized I made this sound like a plug, and that wasn't intentional, but I think it drives the importance of strategic partnerships for these groups with organizations that have the scale and the ability to provide those services and to help them stay ahead of the emerging threats and have a very progressive security program. Great things can be done on small budgets and with small teams, but eventually it becomes a very difficult proposition to be successful in the long term.
Trish, I have a comment, and the way you asked the question was interesting. So the small firms, and we have a mid-tier and up, so we see a different cup of with the industry work, we see everyone. It's actually more important for them to have principles-based regulation in this area than prescriptive, because they're as understaffed as anyone. And, you know, frankly, the regulators have a hard time getting staff in. It's hard for them to be trained effectively, just like it's hard for teams, you know, firms to train their own staff. So when you set out the targets, and it is something we did, and we worked for 5 years with the Federal Reserve, led that working group on operational resilience. That was 5 years worth of global work. Regulators from around the world, hundreds of firms involved, to really get to a principles-based resilience regime that actually is effective, because then it's tolerable to each firm and how they actually use, in this case, product and platform. Something else which, you know, maybe Graham would like to talk about a bit, but the cloud paper that Treasury did had multiple stakeholders contribute to it: cloud providers, third parties, core providers, where Brian is now. That was a really good paper because it set off work across 6 different work streams plus 2 shared work streams that starts to address some of the things you just brought up, whether it be the shared responsibility model. You know, I'm particularly keen on coordinated exams to minimize burden, but there's a lot in there that, you know, we could talk about, but I don't want to, I'd like to see what others have to say.
You want to go next?
Sure, I'll go ahead. And maybe I'll take it somewhere other than cloud, though. You know, the point about digitization and the way that the stakes have been raised here, I mean, I really want to reinforce that point, particularly since so much now, I mean, banks are fundamentally technology companies now, and the raw material of a lot of this, whether it's the cloud services, AI more broadly, fintech more broadly than that, is the underlying customer data. That safeguarding that information and protecting those customers is, I think, the paramount goal for all of us here. Just in terms of reinforcing and preserving trust in the broader financial system, because to me, that is fundamentally what this is about. Is people are not going to use a financial system and financial institutions that they do not trust, that if they give them their information, that it will be protected, they'll be treated in a fair way, and that people are looking out for them. And so, you know, whether it's an old-fashioned bank run, or it is some sort of large customer data breach, or some sort of other hack, that is fundamentally an issue about undermining trust in the system. And that's the thing that we're all trying to work here together to safeguard. And Katheryn and Chris both mentioned information sharing and the speed at which we do that. We are very interested in doing that even faster and finding ways to make it easier for us to get them information and them to get us information. And that is our priority for us. It is not somebody picking up a phone or writing into a Slack channel or sending an email. We are all seeing the same general threat picture as close to simultaneously as we all possibly can. So that's definitely a priority for us. I would also say, in terms of preserving people's trust in their information, as an ethos, move fast and break things does not work if that's what you're trying to do. And so I think that's one way in which the fragmentation trend can be harmful, is people have to come in and talk to us about what the standards are, what we're jointly trying to accomplish, and actually partner with us, not sort of be off somewhere else doing their work and not thinking about how they're going to accomplish their objectives. The last 2 real quick points I want to make. One is on coordination. We totally get that. We are still working on that. We have the FIBIC. We have a Financial Stability Oversight Council. Domestically, they have to talk to one another about a lot of these issues. We have a number of different financial regulatory agencies. We've got the G7 Cyber Experts Group that's supposed to be coordinating a lot of these issues internationally. And so that is one of the things we're definitely working on, is how to streamline and coordinate more across our public sector partners. The last thing I will say is that we have had a lot of close calls lately. Some of those that have been mentioned here, and no one mentioned the IAN outage. You know, these are events that were good learning experiences for us, but we have been very lucky so far that they have generally been contained. They've been opportunities for us to learn and up our game, and not something that has fundamentally undermined trust in the financial system.
So one small comment about that, because I was thinking, contrasting what Brian said about small banks and his customer base, but you're talking much more about fragmentation. It's fintechs and a wide variety of different types of vendors, right? That's seems to me on the surface a harder nut to crack because you basically need to identify those, some maybe through third-party reviews coming from the supervisors. But but it's the same exact issue. Are they sophisticated enough? Are they do they have the right information to do their jobs well?
They don't even have, I mean, for small banks, they have a primary regulator who you can actually talk to.
Right.
For some of these firms, maybe they're state money transmission businesses, maybe there's something else that I don't even know. And so it's hard to know even where to start with some of it.
Anyway, so Ari, I particularly, I mean, obviously, speak about whatever you would like, but
Always.
Yeah, the detection, one of the reasons that I was interested in sort of detection and response plans, because that's very much what you guys do in your sphere. And it seems to me that even there, the complexity of what's happening could actually make even your job more challenging.
Yeah, I think,
though you're mostly on
absolutely. Absolutely. I think everyone's sort of gone to this, but public-private cooperation, collaboration isn't just, something we all talk about, right? We're working every day with law enforcement to, stop bad actors who are trying to take advantage of the technology. So I think there's a lot of real good going on in that enforcement space today. Every U.S. law enforcement agency has teams that have training and tools to do these types of investigations. Literally just yesterday, the FBI and UK authorities denounced indictments and 9 sanctions against 9 individuals involved in a Russian ransomware group. We see this happening more and more, and it's not just FBI, it's Secret Service and DEA and IRSCI and others. So I think we're seeing a lot of great work. Treasury, quite frankly, has really led the way there, and I think done it in a way where they're targeting the illicit sort of underbelly, as Graham's colleague Todd Conklin, I think, coined it, without really going after lawful users of the technology. And I think that's the fine line that regulators and law enforcement are trying to work. And just sort of one note on what the private sector could do. I think, this space, fintech, crypto, blockchain has the unique ability to do a lot on its own without regulators, without government, right? I talked a little bit earlier about the extraordinary visibility that open blockchains allow. And, we run a website, open source. I think of it as sort of the Waze for crypto fraud and scams called Chain Abuse. It is just a place where people can go on and report scams that they've been either a victim of or seen on social media platforms. And there's a button there to push to our law enforcement partners to actually report the crime, right? There's so much we can do as a community as we're building this new technology. And I think it's this constant, whenever we write a report, whenever we produce anything, we're constantly back and forth with law enforcement, with regulators, having these types of conversations. How can we build something better, right? I think those are the conversations that need to happen. And I would say that they are. And I think that there's a lot more opportunity here than folks necessarily think.
Any other final comments? Okay, cool. I think we still have a couple of minutes. Do we? Yes. Okay, cool. All right. So, good. There's actually time to take questions from out here. If we have any questions from the audience, we're happy to have them. Don't be shy.
I'm Linda Jang with the Crypto Council for Innovation, and I have worked at Treasury and the Fed and helped with FIBIC as well as the annual White House cyber security event simulation. And one question I have is, I really think FIBIC is just such a great example of the government and the banking industry getting together and sharing information on cybersecurity threats. Now that the crypto industry is also a force of its own and has its own share of cybersecurity threats, could there be also an opportunity to create a similar organization for crypto community to work with government to share these cybersecurity threats and information?
I take that as largely being for me. Is that right? No one else wants to answer this one? I think the general answer to that is ideally yes. I mean, one of those two themes I mentioned at the outset, the fragmentation piece of it, I see fintech and crypto as being central to that. And how do we bring the good actors in those spaces in so they have the same kind of relationship with us and we with them as the well-established players, so that we can actually figure out how we're getting the full threat picture. One of the issues in this space is the minute you bring somebody into the tent and you're sharing classified intel with them, you want to know you want your partners to be trusted. You want to know who they are. You want to know that they're interested in compliance. You want to know that you have the same shared values, that they are not interested in being involved in illicit activity, that they are not actually doing business with nefarious foreign state actors. There's a whole vetting process that has to happen there. And so step one is relationship establishment, demonstration by our private sector partners that we are all on the same team together in this team sport. And so that's the first part of it. And that's what we have tried to do, at least initially, is who all is out there in this space, who are the ones we can immediately bring in and start to at least have conversations with to turn that into a longer term relationship, and how do we do that? There are obviously some very problematic firms in the crypto space that we have, I think, very little interest in actually bringing in to that particular relationship. So it is a process of onboarding. We didn't just stand up the FIBIC and the FISIC and the ARC and suddenly all this stuff started happening. This has been a long-term process.
And I would just add, I mean, there are some versions of this happening today, right? FinCEN spearheads with the FBI, a group that we're a part of that shares information around ransomware. So if they have an address, they'll often share it with a group of us that can go track and trace that address and work with law enforcement in that way. I do think what you're suggesting is so important. Because, oftentimes we talk about sort of the money laundering that goes on or sort of DPRK cyber activity, but, we really need to work in our industry and do a much better job of working with DeFi protocols, working with exchanges to build out cyber so this doesn't happen in the first place. And it's crazy to kind of listen to this conversation to some extent because it's so far along in obviously the traditional space. And I'm like, man, we need so much of this in our space. But I think it's at its nascent stages. But to Linda's question, which is a great one, I think we could do much more.
I'll also just say, sorry to hop back in, but one of the reasons I think the partnerships work well is because we each realize we got to get ourselves organized, and we're good about telling each other the ways in which we got to be doing that and actually pushing for us, our public sector partners. So yeah, I think step one is to the crypto industry, get yourself organized.
I'll throw in one other piece. Is my mic on? Yeah. It gets to you organized, your maturity, and by bringing yourself to this conversation to the government, we've learned, and we've done this with the ARC, you have to actually be self-aware enough to decompose your functions, your nodes, your flows, right? How, to really get the best out of the relationship, the crypto industry is going to have to be willing to say, this is how the pieces of our ecosystem fit together. This is the technology we're dependent on. Get to the point where the intel community can actually support what you need to defend the industry. So that's kind of the next piece of it.
Thank you. You took exactly what I was going to say. This is a super two-way street in the way this works. And the firms who come in not only have to certainly go through all the vetting that Graham was saying, but they have to seriously share, not super proprietary information, but structural information. And that, crypto's crypto. Some cases the firms would be very willing to do it, others maybe not so much.
I just wanted to add one thing to that. It's interesting you mentioned crypto, but if you look back at the White House's national strategy, there's this concept of secure by design, reciprocity, which is an ability to sort of share findings. It's saying the same thing. We really need more of the technology companies, whichever stream you're thinking, crypto's one, there are many others, to sort of join this. That'll help protect the smaller firms. As an example, it'll set baseline standards, which are important. I mentioned, principles-based regulation. That doesn't mean you don't have standards. That means there are certain baselines you have to hit. So wherever industry can, and it is a shared environment, as Katheryn or Graham or any of us know, we really do talk to each other very candidly about what's going on, what works, what's not working so well. That dialogue has to happen much more broadly. And, what the White House is trying to do, CIS is responsible for, is doing that. And that's an important thing to get behind.
Yeah, a la Russia, Ukraine, the geopolitical situation is probably not going to change improve dramatically in the very near term, which makes it a lot more, sadly, a lot more important. We have time for one more question. Is that allowed? 1 minute, 1 minute. Because we did have one more question at the back. Yeah. Yes.
So I did like Chris's thinking back on all of the great opportunities to share information that came over the past few years of crisis. So my question is around, again, intelligence sharing. Like, I think there's been a lot done on the public sector side. More can be done, but the speed at which things were declassified in order to get it into our hands was like unbelievable, just in the past couple of years. And I think we've done a lot as a private sector, but I think you get to this, there's like the bigs, like, you know, I think Katheryn's and Brian are going to say, you know, we should, and we do, but I think there's still like mid and small who are reluctant for any number of reasons, but I think they're important to, I think there's more information that we have in the private sector than often our public sector friends would have. What should we do? What can we do to help promote more? It's not just looking for the government to give you stuff. You got to give too. For that broader industry group.
Sure. So, one area where I think we've had a lot of success as an industry in solving that problem is through groups like FSISAC, right? The Information Sharing and Analysis Center for Financial Services. I feel like they've done a fantastic job at making membership very accessible for the smallest organizations and availing them as part of that to the full breadth of what's out there for resources, whether it's intel on an emerging threat or access to a working group. So, I think the model is there. Certainly there's a lot of institutions, in this country and worldwide, and always opportunity to expand. But I think the answer is more of that good thing rather than a novel new approach.
We're getting signals up here.
We're getting signals. So now we're done. Thank you all very much. Thank
you,
all of you.